This second half of the year, which started on the 1st of January, is a different half altogether. We've seen dramatic fall in prices. We've had crude oil prices come down from $140 a barrel to between $40 and $45 a barrel now. I mean, that's a huge drop in price. We've seen demand in this country for fuel products still remains reasonably good as far as we see. But on the chemical side, particularly our international chemical businesses, we've not only seen the prices come down, but we've seen volumes contracting. Not a lot, but volumes contracting, and we're expecting that to continue. So then this next half is unfortunately going to be tougher. Fortunately, Sasol, though, has a strong balance sheet, so we stand strong and we'll be able to continue investing in our growth projects, even though that might be at a somewhat slower rate.
It is also a half, of course, in which Sasol will also benefit from the wiseness with the benefit of hindsight of putting in that hedge last year. Is that hedging strategy going to continue? And perhaps are you going to look at the levels that you hedge going forward?
We were delighted with the results of the hedge. Obviously, something like 5 billion rand will be recognized, we trust, for the full financial year, depending on exactly what oil prices are when we close out the year. The hedge winds down now in May of this year, and around about that time, we will start considering whether we repeat the hedge or not. We do it on a financial year basis as a risk mitigation procedure, and also to protect some of our cash flows for CapEx. So we'd like to put it in place, but be honest, it's going to depend what the market prices and conditions look like closer to the middle of the year.
Let's talk about the problem, Charles, at least in this half. We saw operating profit from Sasol Oil, a loss of 1.6 billion rand. And you explained that was largely because of stock write-downs as well as margins being under pressure. Just give us an insight of the difficulties that you're facing in that business.
Yes, Sasol Oil is a very good business. If one looks at its track record, it's performed remarkably well. The current situation is to do with buying crude oil at expensive prices, and that crude oil then rapidly falling, and then selling product at much lower prices. So it's to do with the volatility that we've seen, this loss situation in Sasol Oil for this period. Things are not stable yet, but have stabilized, so we look to an improved performance of Sasol Oil. It remains a very sound business despite pressure on refining margins.
Let's look forward. You mentioned that you are cutting capital expenditure by 40% going forward in the next 3 years. Yes. Can you put that in absolute numbers, what that means?
It's hard to be absolute about anything these days, but we can tell you that this financial year we expect to spend about 15 billion rand. It was going to be a little bit higher than that, about 16. And we expect that level of spend to remain fairly flat for the next 2 years beyond this year. So in the order of 15 billion rand a year. And that is down from a total of 70 billion rand that we previously indicated for the 3-year period.
Which areas are you cutting back on?
We're cutting back in a number of areas, but where we're not cutting back, I think, is the most important thing to say. And in our strategic growth projects, such as the growth of Secunda in South Africa, such as the 80,000 barrel a day new capacity that we're investigating in South Africa called Project Mafuta, such as the China CTL and so on. Those large strategic projects we continue to do the pre-investment on. The rest of the cut will come from a range of small projects and medium-sized projects, and to be honest, we're still busy with that exercise to finalize exactly which are the ones to cut back on. We are very fortunate, of course. We have a lot of projects that are attractive to choose from, even with current market outlooks.
One thing you're doing in this half, of course, is to try and conserve as much cash as you can, and I think that's a factor across most other major businesses. How much are you saving by the various actions that you have taken, from cutting back on capital expenditure to cutting back to in fact suspending your share buyback program and other programs that you're taking?
We're going through the full suite of activities, from cost cutting to working capital to share buyback suspension, as you've said, capex reduction. It feeds into our dividend policy as well, of course. Yes. It's hard to quantify all of this, but at this point in time. But what we can say is that we expect our gearing to remain pretty low, and that we will have sufficient cash to fund not only our existing businesses, it's very important to make sure that we nurture and look after them and grow them, but also we have enough cash through all of these activities that we've mentioned to be able to fund the growth projects of Sasol.
But cash, of course, is something that you have in quite abundance. I mean, considering the state other businesses are in 22 billion rand cash in hand at the first half. What are you going to do with that money? Is there a possibility that we could see you coming to the market and checking out other, perhaps, undervalued players in the industry?
One must always look for the opportunity in a crisis, and clearly, because we have a strong cash position, there always are opportunities. Realistically, though, I can't see us making any significant acquisitions because it's important to remain in this cash conservation mode. Sasol's growth strategy is an organic growth strategy, and for that we need cash to pump into these large projects. So that's really the strategy at this point in time.
Just before we round off, Pat, can you give us an idea of, I know visibility, as everyone keeps saying, is a very difficult thing to try to do in this current market, but are you able to give a forecast of where perhaps you see the oil price being, say, by June, or at least 6-12 months out?
Certainly, we take a pretty conservative view of that one. We believe that oil prices are going to stay at the current levels, might even drop a little bit lower, but they're going to stay at the current levels for the next year or two. It's hard to be too definitive about this for obvious reasons. One thing we know is that whatever we say, it'll be wrong. But we're expecting it to be fairly low, so it will be in the same range, $43, $45 a barrel by June, I would say.